Good morning, everyone. This is Marshall Gittler bringing you the morning comment for February 19th. The minutes of the January Federal Open Market Committee meeting show that some members were starting to get nervous about the possible impact of raising rates or even starting the normalization process. There was an unusual discussion about the dollar, with a few participants pointing to the risk that the dollar could appreciate further. Is this the U.S. joining the currency wars? However, it's important to remember 2 points. First, the meeting took place before the latest U.S. payrolls data, which corroborated the fact that the labor market's continuing to improve. Secondly, exports account for a relatively small share of American GDP, which is basically driven by domestic consumer demand. Therefore, the statement may not be as significant as it seems at first. In any event, the market still expects the Fed to tighten this summer, and therefore the dollar remains underpinned. Yesterday, the ECB increased the amount of emergency liquidity assistance funds that Greek banks can draw on by a relatively small 3.3 billion euros. The move is enough to counter the continued flight of capital from the country, but not enough to provide cash to finance the government through the purchase of T-bills. It indicates that the ECB is trying to keep the Greek economy stable while maintaining pressure for a political deal. Europe's response to Greece's proposal for a settlement hasn't been good. European Commission President Juncker yesterday said that Greece must meet all financial obligations agreed to by past governments. This is precisely the position that the new government in Athens has rejected. So the situation remains critical, and we'll see tomorrow, the deadline for Greece's proposal to the Eurogroup, what happens when the immovable object meets the irresistible force. So far, it doesn't look good. My guess is that they'll find some way to delay a decision further. Nonetheless, I think the risks are rising, and I'd be cautious about the euro. As for today, the main event will be the first release of the minutes of the ECB Governing Council monetary policy discussions. This first account has an additional importance as it contains the discussion of the bank's QE program, which was announced on January 22nd. In the U.S., initial jobless claims are expected to fall, adding to signs of an improved labor market. The Philly Fed Business Activity Index for February is forecast to increase a bit, while Conference Board Leading Index for January is expected to decelerate from the previous month. For more information, including technical analysis, please read the full comment on IronFX.com. You can also follow us on Twitter, like us on Facebook, subscribe to our YouTube channel, or circle us on Google+ to get more trading ideas. This is Marshall Gittler, head of Global FX Strategy at IronFX Global, wishing you solid trading.